It's Sunday, the 11th of October 2015. This is a chart for Perseus Mining. It's been an underperformer for the last couple of months. But I think the last video I put up, I said that the quarterly was going to be very important. That June quarterly was extremely good. All-in costs below $700 US an ounce, and 65,000 ounces, probably the highest quarter ever of production for Perseus. It just happened to occur, the release, on the same day when the gold price got smashed down to 1080 on the Chinese gold holding announcement. And since then it's really struggled. Found a bit of a base at 30 cents here. Just last week had a nice little rally with the gold price going up. Perseus tends to benefit when the US dollar gold price goes up. It doesn't have that same sort of tailwinds that the Australian dollar producers do from their costs falling in Australian dollars. Perseus does get some of the similar benefits from the Ghanaian currency depreciating, but most of their costs are in US dollars, I think. So they should be expecting a new quarterly in the next couple of weeks. Technically, formed a bit of a double bottom here. I guess the confirmation is this 40 cent level, and then if it breaks out above 40, we could see, you should theoretically see another move toward the top of this range, this historic resistance zone, which it feels like it's been forever now, for the last 2 years, been stuck in this 30 to 50 cent range. So it could be a move up toward 50. You can see that it does rally pretty strongly on gold price strength. You see these moves here, that each of those is more than a 70% gain, at least from the bottom. So Perseus does have the potential to rally hard with the gold price. I've got a few. I'm just going to have a look at some of the presentations as well that they've done, just to try and get a feel for what that quarterly is going to be, because I think it's going to be very important. I've just highlighted a couple of things that I think are important. Mainly, the first thing is this hedging. So they've got hedging for $1,432 US for this half year. Most of that's weighted at 1,600, I think, in the December quarter, which will come at the right time, given that's when they're going to have the highest development costs and a lot of the costs incurred on the housing relocation project. But even in the September quarter, I think the hedging is at around 1,250 to 1,300 US, so that's definitely a lot higher than the current gold price. No debt, obviously, as well, which is very, very, very good. One thing I've circled here in terms of their operational performance in September that I think will be important. You can see here the SAG mill only ran at 82% in the June quarter due to power reliability problems, but those problems have been fixed now. So you can see it ran at 88% for the remainder of the June quarter after it was fixed. So assuming that 88% efficiency is kept for the whole September quarter, I think their mill tonnage could be up around 1.8 million tons, which you can see here is pretty significant. Is much higher than the June quarter, and that's going to be important because the grade's going to fall quite a bit, I think, when they start processing a lot from stockpiles. You can see the stockpile grade's only 0.6 grams per ton. I think if we have a look further down the announcement, it talks about. So you can see here that they're expecting to mine some relatively high-grade ore in July and August from the AG pit. So that, I think, that'll keep the costs down and production up for the first part of the quarter. But then from then on, you're probably looking at a lot of stockpile processing. I've just done some estimates here on this. Is just a little spreadsheet I keep. If they can get the milled tons up to 1.8 million tons and the grade drops to one gram a ton, which I think is fairly conservative, you're looking at about 50,000 ounces produced, which would be a pretty good result given the guidance is for 90 to 100,000 ounces. So I think it's probably that 90 to 100,000 is probably more likely to be weighted toward this quarter and less in the December quarter. So if they can hit that, if they can hit 50,000 ounces, we've already heard some comments from the MD at the Denver Gold Forum saying that their costs were coming in quite a bit better than expected. I did a little estimate based on some numbers they had on their cash balance, estimating that their all-in site costs in the month of July was probably closer to $900 US. So even if that has risen toward $1,000 in August and September, I think we're still looking. My estimate is probably 50,000 ounces at $1,000 US. And if they hit that, if they hit that, that's going to be viewed very positively by the market. But the December quarterly is probably even more important, given that's when a lot of these costs are starting to be incurred. So just be aware that the price can move fairly heavily on quarterly results. Obviously this one here, whether it was the quarterly was worse than expected, which I can't see how it would be, but this is more probably related to the gold price moving heavily on that day. But even in April, that this move here was caused by the quarterly announcement being quite a bit better than expected. So the share price does react to the quarterly announcements, given this is really an operational play, banking on operation improvement. So just be aware of that. But I think this is a good stock to own for leverage to the gold price at US $1,200 an ounce. I think Perseus should be 50 cents comfortably. Might take a little bit of time to get there, but then after 1,200 US an ounce, Perseus has got so much scope for improvement. It's been absolutely beaten up. So it's a stock you want to own in a rising US dollar gold price environment.